Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. All right, folks, welcome to another amazing podcast. I have here another amazing guest. Vanessa Peters is our guest, and she has a pretty cool background. Very great story. She also has a book that I want to get into. Book is, I think, tremendous. So now, Vanessa, very unique background, right? So first thing I'd like to share about her is she's an MD, right? So she's a doctor, but the very unique thing about Vanessa is she's the founder of VMD Investing in various asset classes, single family homes, commercial real estate, okay, including retail, apartment communities, short-term rentals, self-storage, manufactured homes, parks. And she's also invested in over 2,500 units across 11 properties and 4 funds. So I take it that you're a little passionate about real estate.
That's an understatement, I think, John.
So I'm going to talk a little bit about your book, Vanessa. So you're an author of The Busy Professional's Guide to Passive Real Estate Investing, A Physician's Path to Building Wealth, Creating Financial Freedom, and Leaving a Legacy.
Correct.
Okay, cool. So the last bit that I'd like to share with the audience, just to sort of invite them into this conversation, is you studied medicine at the University of Calgary in Alberta, Canada. Then you moved to the United States in 2002. And so you are a family physician, a chief physician officer for Graybill Medical Group, which is a primary care medical group in North County, San Diego. And they have about 12 locations and 80 plus providers. So Vanessa Peters, welcome to the show and very glad to have you.
Thanks. I'm so excited to be here.
All right, Vanessa. So talk a little bit about your book. Okay. So I know you wrote this book. It was very intentional. So share with our audience your book, because I myself am very interested. I haven't read it yet, but something that I'm sure after you share, it's going to be in my list.
Okay, great. So here's my book. Here's the cover. You can find it on Amazon. And so it's a quick read. It's not very long. So I designed this book to be basically a primer on syndications. So what is a syndication? Why would you invest in a syndication? And mostly for me, why I got into it. Because as a busy professional, I have money, but not time. And so that I went through a variety of paths to find out how I can invest in real estate. I started investing in real estate in 2008, and I purchased a home in Murrieta, which is just north of us here in the Inland Empire. Yes. And a realtor friend had said, you know what, that's a great place to buy. They're going to appreciate it. This was when obviously the bottom had fallen out of the market, and there was short sales. And so I was like, okay, well, I have some extra money. Never bought real estate before. Went up there, looked around, bought a short sale, nice kind of brand new home. And unfortunately, I didn't know better. I didn't know enough that was such a good buy, because the price kept going down on the house. And I was watching it for the next 3 years kind of keep going down. And I was like, ooh, maybe I made a mistake. I had good tenants. It was cash flowing. So I just kind of let it be.
That's a good problem to have, price going down. Right?
Well, not when you're owning it. I thought
I thought you were in the process of buying it. I'm sorry.
No. For 3 years, it continued to drop because I bought kind of at the beginning of the downturn. If I had known better, I would have kind of kept buying 1 or 2 every year.
Gotcha.
And accumulating more of these homes up in that same neighborhood. But I didn't know. I also got busy with work and got married, started a family, and forgot about real estate, basically. I got busy and knew that the place was cash flowing. Didn't really look at the price too often until I think 2013, 14 or something like that. I was like, wow, the place has gone up a lot. It's like almost double.
Wow.
So my 225 house was now like 400. And I said, that's amazing. I need to do more of that.
Yeah.
And I had always loved real estate. When I first came down to California from Canada, where I did all my training, I read Rich Dad, Poor Dad, went to a few of their seminars, thought that it was a good concept, especially the cash flow quadrants and getting into the business and the investor side of things. But I had just gotten out of medical school. I had a huge debt load. I wasn't about to abandon my training to do that. And I just didn't feel comfortable. But, fast forward 10 years, 15 years, I was like, oh, okay, I kind of get it. Revisited that. and said, I want to get back into real estate. This was about 5 years ago. I also realized that while I was well paid at my job, it wasn't affording me the freedoms that I wanted
Sure.
to travel, to be with my family. I'm limited. I only get this much paid time. It's actually not even paid time off. It's not PTO, it's unpaid time off, because as a professional who trades time for money, I don't
Right.
get paid when I'm not working. So when
Right.
I'm not at the office vacationing, I'm thinking, oh gosh, I'm not at the office. I'm not making any money. So I thought that there's got to be a better way. And then I was like, oh yeah, passive income through real estate.
Interesting.
So thinking that I would get back into that, I started looking for homes in our area, and it was already too expensive to really find that anything good in 2015 and 16.
Sure.
So I started looking around, what are my options? I was determined to invest in real estate. I just knew that that was the way for me to build my wealth and move that net worth, that needle. Because
Exactly.
when I was in my mid 30s, my financial advisor told me, you're going to need, I don't remember, $4 or $5 million to retire. And then you'll have a safe withdrawal rate of 4% and you'll be okay for the rest of your life. And I said, oh, okay, well, I'd like to retire when I'm 45. And he laughed. He's like, okay.
Did he
And then
really?
yeah,
Oh,
yeah.
wow.
Well, it was only 10 years away. And at my current income, that probably wasn't going to happen. And so, but instead I saved as much as I could. I was saving 50%, and I was like determined.
Right.
So 8 years goes by. I'm watching my net worth. I'm tracking it on a spreadsheet. And while I'm saving a lot, my net worth is increasing in a linear fashion. It's just
Mhm.
going up by the amount I'm saving. That's like, well, that's simple, but it's not really helping me get to the
Sure.
financial freedom. Where's the J point? Where's the hockey stick? The exponential
Oh, I
stuff.
like that. The J point, the hockey stick.
Yeah.
I'm going to use that.
Yeah. Like, where's the compounding?
That's
Well, it
right.
turns out
That's right.
compounding takes a long time. You're not going to compound in 5 years, especially when you're dealing with interest rates like what I was getting in the stock market, even though we were in a bull market. So I knew that I had to look elsewhere, and single family homes in San Diego County is not going to work. Purchasing out of state turnkey rentals was another option that a lot of people here do. And I was uncomfortable with that because I just didn't want the responsibility or the liability of owning a place very far away from me. I wanted to be able
Right.
to get to it if I was going to own it outright and be responsible for it. I got on Bigger Pockets. I started reading everything that they had, listening to all their podcasts, and how Brandon tells you can like turn a single into a duplex into da 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 and all the way up. And I was like, I don't really have time for that. I need another way. I need a faster way. And then I learned about syndication, basically pooling your money as a limited partner to be an owner in a larger building.
Sure.
And did some research on it, contacted a few folks online. And when I learned about what the returns were and how really amazing they were, and the tax benefits and the limited liability plus the passivity of it, I realized, this is what I need. This is passive real estate investing. By having a single family home, flipping a home, wholesaling, whatever else you can do is not passive. This is passive. And it was like a light bulb went off. And I was like, cool, this is what I need to do. I need to plow as much money into this as I can. So that's what I did. I rolled over from 401k to self-directed 401k, put money in there. And before I knew it, I had like 8 syndications, and was really happy with getting that cash flow, adding it
Sure. Of
up and seeing
course.
this is working. Started talking to my, anyone who would listen basically about real estate, and realized that nobody else knew about this. Nobody in my circle had heard of this.
Why
And
do you think that is, though? I mean, it just,
right, I kind of went back to my financial advisor. I was like, why didn't you tell me about this? And it turns out that, well, that's not what they sell.
of
If
course.
you have a hammer, then everything's a nail. So if you're if you sell securities and you're a broker dealer, or you sell insurance, then that's what you sell. That's what you
Right.
do. When I went to them with these deals, they were like, well, those look pretty cool. But they couldn't say any more than that. And now I understand that that's because they didn't have a license for that. And they have to be real careful about what they
Sure.
recommend. They have a fiduciary responsibility. So I realized I was kind of out on my own here, and learned that these deals, many of them are not advertised because they're exempt securities under the SEC, under a certain law, Regulation D, 506B, most of them, and you can't advertise. So how are you going to find out about it if you don't know somebody, right?
Right.
So that was when I decided I'm going to spread the word and, start telling my friends about it. Then I got to know some operators and began being part of the general partnership and was educating investors. So after many, many phone calls educating investors, I thought, you know what? I need to write this all down. I'm just going to put it in a book. So I spent some time writing a book, mostly on an airplane, and just told my story about kind of like how I got to where I am. And hey, these are the basics of syndication. I also put in a roadmap to wealth so that in 8 years, you could have $100,000 of passive income if you invest very simply about 100 grand a year, you know, at a certain, obviously assumptions.
Sure,
So,
sure.
so that's in the book, and it's a quick read, and it's for folks who would like to learn more about how to invest in truly passive.
I really appreciate the summary. I think this is kind of a fascinating conversation for me, right? Because on one end, professional, busy professional, right? You spend a lot of time building expertise as a medical doctor, right? As an MD. And then, you had this revelation. You're like, hey, look, I make really good money or generate good cash, W-2 cash. Now I need to find a way to compound that. Saving it, yes, I'm doing that, but I want to compound it, right? And I want to do it a little faster. But what's really interesting in this conversation, though, is just your experiences meeting with other people with limited knowledge around this, but yet their job is to advise you on the best possible opportunities for building wealth. So when you discovered syndications, right, being able to invest in limited partnerships in real estate, what did you start doing to start building the expertise to get yourself comfortable to start doing more investing?
Just educating myself. So I'm a sponge. When I take on a new topic, I go to the library, I get a stack of books, I buy a ton of books, listen to tons of podcasts. It's kind of what I live and breathe until I feel that comfort level that
Right.
like, okay, I can recite this stuff now. I know exactly how this works. I took, a course in underwriting so I could understand how all that worked and how I can review the spreadsheets and the sensitivity analyses and things like that. So it's really just about amassing knowledge, just like we do in medical school or any other school. Then you can feel comfortable teaching other folks about it.
Sure. And so at what point did it click, right? Did you get comfortable to start writing checks? Because it's one thing to learn something, it's another
Hmm.
thing to actually start putting your money behind what your ideas are
Yeah,
and what your ambitions are. I always tell people, I go, if the quickest way to learn something is make an investment in it. And at that point, you're
absolutely.
completely vested and you are now forced to learn, right? And so
Exactly.
when did that happen for you? What was kind of the light bulb or the catalyst?
Well, I had done a ton of research and was skeptical about syndications when I first learned about them because I had done so much reading about the right way to do it, which was to 1031 exchange your way into larger and larger properties over years. I
Right.
don't want to wait years. So when I learned that, okay, maybe a 7 or 8% preferred return, maybe double your money in 5 years, that sounded amazing. But I was also skeptical because, I've been burned before on some things. And as doctors and other high earning professionals, you kind of have a target on your back. People might want to take advantage of you. So I did some investigating into this particular deal, and I actually did criminal background checks on the operator, property manager, and everybody involved. I flew out to Dallas, looked at the property, walked the property, met the property managers, et cetera. And then I was like, okay, I think this is this. I got a gut check from them by meeting them in person, and then I invested $50,000. And honestly, it was like 2 weeks. I learned about it, and then within 2 weeks, I had made the investment. I agree that you have to take action.
Yeah.
And for
100%.
me, I had been doing so much research. I had been spending so much time looking at properties locally, running the calculators, trying to figure out what would cash flow, that I felt like I had really done my homework. And when I found this, I just knew inside, I was like, this is what I need to be doing.
Right.
So when I
Right.
found a deal that checked out with my intuition, I just did it. And then after that, the first check is always the hardest when you wire that money and you're like, oh my God. But I would kind of have a positive attitude. I'm like, you know what? If I lose it, I'll have learned a $50,000 lesson, but it's not the end of the world, you
Yeah.
know?
Yeah. Yeah. I think that's really, really good advice, right? So as long as we don't have too many expensive seminars or you're losing that kind of money or more, and I've had some very expensive seminars,
Yeah.
but I was able to convert those to really great learning opportunities. And so one of them was a very large one, right? It was like a multi-million-dollar seminar. But the learnings that I got from that and what I learned from that, I was able to apply it and multiply that a couple times, right? So I really like how you position that. So now I'm going to pivot a little bit and talk about, your most profitable deal. So one of the things that I get requests for all the time is, John,
Hmm.
walk me through a deal, right? Don't just walk me through a deal, walk me through a really, really good one.
Hmm.
So, inside of this business, if we break down the cycle here, it really, we can break them down into four categories, right? We have to acquire the property or buy right, put great financing on it, whether debt, equity, or a combination thereof. Then we have to manage the asset to hit our plan. And then lastly, at some point, we're going to dispose of it. Okay. And so, what did that cycle look like for your best opportunity, the most profitable one to date? And I know you've been in several, right? You've been in over 11 investment opportunities at this point. So, talk us through that first very profitable deal or the most profitable one, and why?
Sure. Can I start with the least profitable one first?
Well, even better. I was going to go to that last, but let's start with the least profitable one then first. You
Well,
beat me to it. Start with that
oh,
one
okay.
first.
Sorry. It's just it's still in my mind because I'm still in the deal. So I
Interesting.
invested in what was a syndication that I didn't know was a syndication in 2011. I'm still in this 10-year fund for it's basically retail, big
Mhm.
box retail. And initially, the 5.5% sounded like a good return because I didn't know any better, but over the years, it has gone down, and it hit a low of 2.8% 6 months ago, like right at the beginning of COVID. They just
Oh, wow.
put it down to 2.8%. They just put it back up a little bit to 3.25, I think. So I have my money in this deal that I cannot get it out because it hasn't gone full cycle yet. They say about 10 years. And even then, it's kind of a slow process to close out the deal. So I guess the lesson there is that if you invest in something that you don't understand, you might end up with your money tied up for a really long time. It's illiquid and it's really earning me hardly anything. Yeah, it's tax leverage, but I wish that I had done more research before I just listened to someone who said, hey, you should invest in this. And I had some extra cash, so I didn't know any better. So research is key.
Yeah.
My best deal was a self-storage opportunity, ground up development. This one is a pretty sweet deal, 3-year exit, ground up to get stabilized and sold with an IRR of 32%.
Have you realized that yet, or is that still in process?
It's almost done.
Okay.
So it's in a nice area in Maryland, and they pay 12% on the nose every month, so you get 1% per month of your investment, which is good cash flow.
Right.
And then their historical returns have been in the mid 30s, but this one will be probably a little bit lower just due to the economy changing a bit. But so soon I expect to get 32% in 3 years. So 30% a year.
That's great. What changed in how you approach that investment versus the one that's not very profitable, right?
The
What
2.8%?
yes, the
Yeah.
2.8%. Walk us through how you approached one over the other, right? How did you change your due diligence criteria? What does that look like now versus when you started? So how do you approach a
Well,
profitable
yeah. I
investment?
mean, obviously, the first time I invested, I had no idea what I was doing. I was
Right.
just going on the recommendation of somebody else. Sometimes that works and sometimes it doesn't. For example, the home I bought in Marietta in 2008 was also the recommendation of a realtor. Again, I didn't do any due diligence. I just did it. Hey, that one worked out. So you win some, you lose some.
Sure.
So for the self storage, I did a lot of research on self storage and I still love that niche. And I would love to have my own park someday just for cash flow.
Yeah.
And so I really kind of love that niche. And so I already knew a lot about it when this opportunity came along. Just the fact that they were really in a high income area that doesn't usually allow this type of new development.
Product. Yeah.
Read through all the evaluations by all the folks who had gone through the demographics of the area and such. And it was just like, yeah, this is going to be a good deal. So just more experience. I just,
Yeah.
understood it better and also trusted the folks who were working on the deal. That's the other thing. Any deal might look good on paper, but if you don't know and trust the operator, then it doesn't really matter because they could be poor business implementers.
Yeah.
And even if the numbers pencil and everything looks good, if they can't operate the business and make it happen, then it's not going to happen.
Yeah, I really love what you said. A friend of mine, in fact, my old boss many years ago when I was in commercial banking, and he was really the best manager that I've had. I mean, when I look back on a lot of the things that I learned from him, I implement a lot of those things today in our own businesses, right? Especially with our teams. But one of the things that he used to say is an average plan well executed will beat a great plan poorly executed every single time, right? I mean,
Yeah.
so to your point about making sure that you are working with great operators, people who are not only just good at execution, but also good at planning. Planning and then executing, really, really valuable. And so, yeah, I really like that. I really like that. So I'm going to pivot now again and
Mhm.
start asking you some questions around what areas or product types are you very interested in at this point? Are you primarily focused on multifamily? I heard you saying parks. I don't know if did you say self storage or mobile home parks? What product type are you pursuing in this market, right? We're in COVID-19, right? We're going through a very unique situation right now, which is
Mhm.
changing how a lot of people look at opportunities and underwrite for that matter. And so, what are your thoughts on that?
Yeah, it's been interesting the past 6 months to watch, how our investments are performing and how people are pivoting. I feel like we haven't realized disruption that is going to occur from COVID yet
Mm,
because people are being propped up by governmental subsidies at this point.
right,
All the buildings I'm invested in have been doing excellent on their rent collection. Many of them have halted renovations because they're just kind of shoring up cash, and that totally makes sense. Or they're holding distributions or quarterly. So that all makes sense. I'm happy that they're being conservative and sort of holding back a little bit. But it all depends on when we get a vaccine, et cetera, treatment, that sort of thing. If this keeps going, then there's going to be some major fallout like we may have seen, 10, 12 years ago with people
right,
losing homes. But that's why I invest in apartments because people will always need a place to live and they're always going to need
sure,
apartments to live in. That's just, and especially I only invest in B class apartments, not so much workforce housing, not the brand new ground up developments. So sort of the 1980 to 1995 vintage value add. And
right.
that's a pretty solid class, I think. So I feel comfortable with that still. Having said that, there haven't been that many deals this year because I think sellers are looking for deals and buyers are like, no way, I'm not reducing my price. Why should I reduce my price? And so there's a bit of a stalemate. People are waiting to see what happens.
There's always a great deal out there somewhere. The question is, how do I find it?
Yes,
Right?
exactly.
Now, what about Class B multifamily assets? So you said this is the only thing that I invest in, John. So can you
Mhm.
talk a little bit more about the logic behind that? Why?
Well, like I said, I think it's a solid place to fall because if you live in a class A apartment and a recession hits, you're going to move down to a class B. If you lose your home, you'll probably move into a class B. The folks that are in class B apartments generally have a good income. They're young folks, the millennials mainly, and they have jobs in IT. They're working for Amazon, things like that. So they have pretty good income and they're not as likely to lose their job as the sort of blue collar workers who are in hospitality and service industries, which have
Sure.
been decimated, obviously. So I feel like the C class is much more risky, higher potential returns, but also a lot more risk. So I feel like B class is a good place to land. Mobile homes is another place that I love too. It's affordable housing. There's a
Right.
lot of opportunity to take up a mom and pop park and buy several of them and get them under common management and renovate them and make them nicer.
Right.
And they aren't building any more of them because nobody wants mobile home parks to be in their city. So you kind of have to just deal with the ones that are already available, of which there are several. I'm working with a few operators on. It has to be a fund. One park isn't big enough to syndicate. So,
Sure.
and then I already mentioned that I love self storage, and the reasons for that is that it doesn't matter if the economy is going up or going down. We always need self storage. Right now, it's popular because the restaurateurs who are losing their business aren't going to get rid of their equipment. They're going to put it in self storage. The folks who live in apartments are going to use it for their ski gear and their surfboard. And then in good times, of course, the people who lose their homes unfortunately need to use self storage while they move into apartments. And then in good times, as Americans, we just buy too much crap and, we don't want to part with our stuff. So
Just spenders, aren't we? We just love stuff. And so
get that GDP up there.
I know, I agree. The United States of America is the greatest retail marketing machine of all machines, isn't it? I mean, we just find
Yeah.
a way to create spending. It's amazing to me. It
I
really
know.
is. So that in and of itself makes me a fan for self-storage too. I'm going to ask you a couple of questions around sponsorship, right? Because in hearing how you're describing your investments and how you interact with folks and some of the lessons that you've learned, I know when you're looking to invest, especially as a limited partner, sponsors are very important, right? The operators. And I was on a phone call right before this one with a very successful broker in San Diego, and he's closed over 400 deals, and we're talking through, a couple of transactions, a couple of opportunities, and we got into the same discussion. And his whole comment was, "Hey, when I come across something that makes sense, I pick up the phone and call folks that I know can deal with the problem, right? Usually there's
Hmm.
some type of problem involved." And so I found that pretty fascinating. So when you pick up the phone to actually reach out to a prospective operator, right, or a sponsor, the common word for it is, what does the conversation look like from your standpoint? What are you trying to vet out, right? What are you looking for in not an average sponsor, but a great sponsor, right? Someone who's a
Hmm.
tremendous operator with ideally, a good background, or someone who just does what they say. That's how I like to break it down, right? But what do you look for? What does that conversation look like from you?
Yeah, I am very picky about operators, especially, I mean, I'll take risks with my own money. I'll try somebody new and give them some money just to see how it goes. But if I'm bringing in investors and becoming part of the GP, I want to make sure that they're absolutely rock solid. And so, it really comes down to trusting them. I need to know them so I can trust them. How do you trust them? Well, it can take time. You can get to know them over time.
Sure.
Also, looking at their track record, obviously, and the team that they work with. So, do they have a solid construction team, property management, that kind of stuff? Do they have a thought leadership platform? If they are
I
out
like that.
there,
Can you repeat that again? Do they have a thought leadership platform? Can you say that one more time? That is so
yes, I
smart.
can. Well, of course. I mean, that's what you're doing. We have to get out there. We have to put ourselves out there and have people get to know us. So when people hear John talk on his podcast, they say, "Hey, he's kind of a likable guy. I trust him." And so
Hmm.
the other thing is that if you have written articles, done podcasts, you have, valuable information on your website, then you are showing your expertise in the industry. Also, it's kind of a small world. Many people don't realize that. But once you get into the multifamily world, there's not that many people there. And if you're going to pull a fast one and, you know, do something wrong or just kind of shirk your duties, don't follow through on what you said you were going to do, it's going to get figured out pretty fast and you
Right.
won't be invited to any more deals. The brokers will learn about what you're like. And, that's like you said, the broker said he reaches out to the people who can actually make it happen.
Right.
And so it's
Right.
all about reputation in my mind. I get pinged on LinkedIn like every other day, like, hey, I'm like, I'm not going to partner with some random person on LinkedIn. There needs to
Yeah.
be a little more
Interesting.
to it and preferably a referral from someone that I trust.
Sure. So you mean to tell me if someone's not performing, that they're likely not going to get invited, to that party again? Oh man,
Exactly.
that's pretty classic, right? That's pretty classic. But you know what? If everyone was a performer, and this is what I tell our teams, if everyone was a performer, we wouldn't have the opportunities that we do. So
Hmm.
instead of us looking at the challenge as a challenge, let's be grateful for it, because if the challenge wasn't there, if everyone was great at solving problems and great at performing and really good operators, we just wouldn't have the opportunities that we do.
Exactly.
So I like challenge, right? In fact, I welcome it because I
Hmm.
think that's where the opportunities are truly created. So I appreciate the comment. So you said something that I really like, which was their thought leadership platform. I've never heard anyone put it quite that way, especially an investor. But
Hmm.
why is that important to you, right? I mean, why would someone's thought process or their leadership ability be important to you as an investor?
Well, it shows that you can write or speak, coherently, and that I'm not kidding.
No,
So,
I get it.
um,
I get it.
and that you're a person who can be related to. I like to get to know people. And when I
Interesting.
hear them speaking, I can relate to them. And I want to hear, are they a nice person? I can just kind of pick up on that. I've spoken to plenty of people, guys mostly, at these meetups. And you're like, hi, how are you? My name's Vanessa. What's your name? And they tell me their name. And then they jump into the nitty gritty of what they're doing with this building, how much water per unit they're saving on low flow toilets. And they're basically jumping into the underwriting of the deal. And I'm just like, whoa, That's like too fast. Slow
Right,
down and
right.
like, let's get
Hey,
to know each other a
you
little
need to
bit.
date me first. You need to date me first,
Exactly.
right?
Yeah, we need to slow down.
That's
Not very
classic.
big. I mean, to generalize, engineers, they're not real good with people and things like that. It's just, I like to see people who can interact with the investors, especially on a personable level.
Sure.
Yeah, the engineers can do their stuff in the back room.
I really value what you said because I've never really heard it positioned that way before. But you're right. I think when they're able to communicate a really good message, it also carries over, translates over into how they manage people. And real
Hmm.
estate is a true people business, especially when you're dealing with hundreds of units, right? You have to influence people to perform. And so I like that. And I agree with you. I think people who are good at communicating a message, more often than not, they're able to carry that over to their teams and
Hmm.
lead their teams and influence. That's kind of a cool.
Effectively,
Yeah.
be effective with their teams. Yeah.
Yeah, yeah. And
Hmm.
also, you're right with their investor base as well. But I think that if they can influence their operations, investors will naturally be happy as a byproduct because they're
Hmm.
able to distribute, you know, a great cash return to their investors, right? So, really, really like that. Well, Vanessa, we are approaching the end of our show, and you've been a tremendous host. I really appreciate your perspective on being a passive investor, the thought leadership component and how that carries over to leadership. I think that was huge. But also just the fact that you are a busy doctor, right? You've also made the time and created the time in your life to also be a successful passive investor. And now you have a process and thoughts behind how to do that very effectively. I find that pretty cool and very fascinating. So how do people get a hold of you? Can you share for those that want to reach out and say, hey, I want to buy your book? Maybe let's start there. And then lastly, how would people get a hold of you?
Sure. You can go to Amazon to check out my book, The Busy Professional's Guide to Passive Real Estate Investing. Also, if you go to my website, which is vmdinvesting.com, you can download the first, I think, 3 chapters for free to see if you like it at all before you buy it. And also on that website, you can you can subscribe to my mailing list, and then I will usually get in touch with you to reach out and get a personal connection going. And also I have a roadmap, which is basically a spreadsheet where you can play with it and see if I invested this much per year for this many years, how much passive income would I have, assuming that I reinvested all the dividends. I was looking for a calculator like that everywhere and I couldn't find it. So I created one. And so you can download the spreadsheet and just kind of see what you could do. And you can change the assumptions as well. So
Awesome.
that's at vmdinvesting.com/roadmap.
Hey, thank you so much for sharing that. I think that's really clever. One of the things that I pick up in our conversation is you'll try something. If it's not working, you'll just create it. You've said that. And so I see that's just part of who you are, right? Which is reflective in how you take action. So I think that's really cool. Do you have any questions for me that you think that you want to ask that you feel can add value to our audience? Anything that comes to mind, happy to answer any way that I can.
I think that we're both action oriented people. And, I think that your messaging as well is that you really need to get out there and try something before you will learn. And you can listen to podcasts and read books all day long, but if you don't take action, then you're just sitting on the couch and nothing's changing.
You mean it? You mean greatness doesn't just fall from the heavens?
Unfortunately not. And money doesn't grow on trees.
Yeah, right, right. Well, you've been a tremendous guest. Very grateful to have you on. Vanessa Peters, ladies and gentlemen, thank you so much for participating and really look forward to having you on again.
Okay, thank you. I really appreciate it. It has fun.
Thank you. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.